my concern today is for Kim and I, our real issue is social unrest. You know, the gap between the rich and poor is now excessive. And that leads to revolution, civil rioting, and all this. When you print all this fake money and you rig it for the rich only, which is fine with me, but you should tell people, that's what Nomi's doing, it's rigged. What that produces is a wave of intensified and widespread social unrest, disjointed political upheaval, dangerous extremism, punishing trade wars, and sweeping isolation.
Yeah, so what happened was, as we know, after the financial crisis, everything got crazy disjointed between the markets and the real economy already. And that was because the Federal Reserve stepped in and they basically created out of nowhere $4.5 trillion worth of money. I mean, wouldn't everybody like to press a button and do that? As well as they brought rates down to zero. And what I called a collusion was they basically worked with other central banks around the world. So Bank of Japan, European Central Bank, etc., to really do the same thing. And so for a while, the world was floating on this fabricated, this fake money. And what that created was a situation where financial assets appreciated, went up, markets went up ultimately, but the real economy very much dragged. And that was going on for years. And the result of that sort of culminated in 2019, where we had a year of the most riots, the most civil unrest, and the most general upheaval economically. Even after all this year of fake money, all these years of cheap money, it was considered the highest year of that kind of unrest until now. And so what happened after 2019 is the Fed went back to zero interest rates. They had raised them a little bit, and then they dropped them back down. Right now we're seeing them raise again. So they do have this ability to go up and down with rates when they feel like it and to create money when they feel like it. And then the pandemic happened and the Fed created another $4.5 trillion worth of money out of nowhere. So now the Fed's sitting on $9 trillion of giveaway money that flows into the markets, that creates an appreciation of assets, financial assets all over the place, but again leaves the real economy behind. And now what we're seeing is the Fed's going back on that. It's raising rates a little bit. It still has $9 trillion worth of assets. It still has that money in the market. But now the economy is starting to slow down. And so what we're seeing time and time again is when the Fed gets involved, it helps the markets, it helps participants in the markets, and up or down, it leaves the real economy behind.
And you know, for years they've linked the stock market. Oh, the stock market's doing great, so the economy is doing great. And there was such a disconnect between the stock market and what's happening, as to your point, in the real economy. People are struggling, they're out of work, inflation's hitting, so the economy is in horrible shape, yet the narrative is still, oh, the economy's doing well because the markets are doing well, so everybody should be happy. What would you say to that?
Well, that's exactly right. And the thing is, when the markets are doing well because of fake money, it's very different from them doing well because companies are producing, or because wages are, keeping up with inflation, or because consumers are buying, or because of any of the things that create a long-term stable economy, including growth, including development, housing, infrastructure, all of those things that require real money, real investment, and have real growth.
Yeah.
When you're just investing in financial assets, which you can't touch or feel, because the money is so cheap and just available from central banks, well, then that's the result. The markets get ahead of the real economy, and the real economy just can't catch up because it doesn't have that kind of free money. And that's what we're in right now. But now we have an inflation problem because of various reasons, including the fact that the Fed forgot inflation was happening as it was rising, called it transitional. But even if the Fed can't affect inflation, people are feeling inflation. And now they're seeing rates creep back up, and that's hurting the average person's ability to even buy a home with a mortgage right now. So whatever the Fed does, it winds up hurting the sort of average person and the real economy.
So what that causes what we call the everything bubble, where real estate goes up, stocks go up, and bonds go up. And the trouble is, it only makes the bankers richer.
Well, because they're moving all that stuff around. That's exactly right, Robert. It makes the bankers richer because they don't care where money's going. They will basically, it's like a hate-seeking missile, right? They're going to find where the money is hottest. They're going to leverage that money because it's cheap and available. That's where the bankers go. That's where their friend investors go. That's why BlackRock, who's sitting on a $9-10 trillion book of assets, will go. It's where everyone who has the ability to get money cheaply will push that money. And they want it to make money fast. They want money to reproduce quickly. And in that way, they want money to be like a virus, produce quickly, reproduce quickly. But that doesn't mean it has the staying power to create that long-term money flow. Like, I know, Kim, you look at this a lot, that cash flow on a long-term basis, say from real estate, or just from foundational growth of the economy. It's in and out. And that's what we've seen with these bubbles. It's just in and out.
So the thing that I think is kind of funny, because I want to get to what you see on the inside. The question is, are these bad people? That's what I'm going to ask you, okay? We know what they're doing is bad, but are they bad people? Before I go on, I always thought it was funny that Bernanke gets up there and he says, we have a thing called a printing press, and that's what they call them, Helicopter Ben.
Right.
And everybody says, oh, they would never do that. So, well, what do you think the stimmy checks were? All the stimmy checks were helicopter money from banks, Treasury and the banks. I mean, the Fed.
Well, that's exactly right. If the Fed hadn't stepped in and created money at that moment, that money would not have been available. It is about the Fed basically, sort of moving some digits on a computer, creating this sort of fake money, and then buying bonds or buying the debt of the U.S. government or of the housing market or whatever it might be with that fake money. And that creates this additional bubble. And so, it's a good question. Are these people evil? Well, you didn't say evil. I'm throwing that into your mouth. Are they bad people? You know what? A person can be good or bad, whether they're rich or poor. That's my ultimate belief. I mean, I think that's an as per basis either way. But these are definitely people who had the ability and the capability to use the rigging of the system in their favor in an outsized way. And yes, some of them committed crimes along the way in doing that. Some of them skirted just between the lines and didn't. And a lot of times, the individuals who got very rich at the banks could hide within their banks. If Goldman Sachs, for example, paid, which they did, a $550 million fine for some of the stuff they did to the housing market back in the financial crisis days, that money didn't come out of the pockets of their CEOs or of their executives. It came out of sort of their corporate till. So in that way, the people that work for these large banks and large institutions can take advantage of all this cheap money as well through the shares or the options they own in their own companies. And if something goes wrong, like something illegal,
they bail them out.
We bail them out. And that's what the Fed's done.
Well, not only the Fed, what I think is hysterical is when Obama got elected, everybody, Obama's for the people. But when he got elected, the first thing he did was bail out the banks and General Motors and all the failing companies. He is on the inside. I mean, he's working with them. And everybody, he's a man of the people. Bullshit. He bailed out the rich again. You know what I mean? Give me a break. Watch what they do, not what they say. And he bailed out the rich. Oh, but he's a man of the people. Give me an effing break.